Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We've got the CPI today, and there's a couple of things that I want to show you, so let me dive straight into it. Oh, we do need the music on here, though. Okay, so come over to the charts here. Yesterday was an extremely tight range in the treasuries, you can see over through here, but after the auction, which was not very good, by the way, but after the auction, that kind of pressure was gone and the market was able to rally. And now in the overnight session, we have rallied even more, erasing some of that decline from Friday's non-farms number. Now, we do have CPI coming up. I anticipate that one's probably going to be in line with expectations and the market is going to read that as a positive. But this move up here kind of suggests to me that the upside is probably going to be more limited because they're already buying it ahead of that news. Here's the S&P 500, slight win yesterday, and they're kind of moving up. Some of the overnight markets, like in Asia and Europe, struggled a little bit, but the S&P 500 is doing pretty okay. Here's oil taking another bit of a decline here. Some people just think that the oil market is dead, man. Okay, gold and silver still kind of struggling, and kappa all over the place. Japanese yen. Well, they're on the upside again after all of this craziness. There was a slightly dovish report in Japan. And we get the dollar. The dollar is falling back towards 103.6. And Bitcoin taking quite a decline yesterday. And I believe the driver for this news was Elizabeth Warren's bill to regulate cryptocurrencies. That seems to be the driver there. That bill is picking up steam. So that's where we're at. We got about 4 minutes before the news. And just to review, for those of you that maybe missed it yesterday, U.S. core CPI month over month is expected to be at spot 3. And I think it's very likely that we hit right on that. If we get a spot 4, that's going to spark chaos in the market. Conversely, if we get below spot 3, I think that the markets would be really, really happy about it. I don't think that this quite justifies the 4 rate cuts next year, but it will be dovish. And then that puts all of the focus on Jerome Powell tomorrow. So got about 3 minutes. I have a few bites of oatmeal here I'm going to take. So I'm just going to mute myself and let's wait for the news. Well, I think that in this situation, it's more likely that we get an inline number and that the S&P 500 rallies, but it will not rally, the Dow 1,000 points. Probably not. It'll probably be a very small winner. Geez, I'm saying something. Market must have heard me because we just saw the markets all jump here there, right? I do kind of, I'm worried that the treasuries seem to be front running it a little bit too much. Good morning, Zohan. By the way, good morning, Tihan, Octavius, Dom, and Kiwi, all here early in this morning. I'm really, really proud about how many people are there, like right at the beginning of the stream these days. It used to be pretty sparse at the beginning, but now people are really coming in early. I really appreciate it. Means we're doing a good job. If this number is bad, I'm hitting it, but I don't think that's the liquidity is not very good now. Holy shit. Okay, month over month is in line. No trade for me. I am locking. Jeez. That was what a move. There's a lot of conflict in that. There's a lot of conflicting order flow in that. Okay, so the numbers. CPI headline year over year 3.1 in line with the expectation. US CPI month over month spot 1 versus a 0. Remember that includes food and energy. We had a decline in energy. That's why they were anticipating 0. The decline was not quite as big as they thought, so we got spot 1. The one that I think matters the most, US core CPI month over month spot 3 versus spot 3 in line with expectations. My anticipation is that this should be a rally for the markets, but a slight one. And maybe already have overdone it. In the treasuries here, for sure, maybe have slightly already overdone it. Back to 111. Very interesting that they bounced right off of that 111. That's been a pretty, key price over the past few weeks, hasn't it? But there was some selling. There was some selling on that news, too. I think that there were some people did not like that the headline CPI month over month was spot 1 instead of 0. What a mess for anybody that was like holding a position or something like that, or took volume in that. What a mess. So I don't think that this is a very good situation for me to be coming in and finding a flow, trying to guess what the flow is going to be. But I do think I can see multiple scenarios, both long and short, where we could see some meta orders step in. So I think that we need to, just monitor what it's doing, and a large meta order may reveal itself. Usually those don't start until about 5 minutes after the news, though, so S&P 500 is liking it, but only by about 5 points. Of course, they did rally into the news, so. Now, another thing I'm kind of realizing now is that this really makes, Jerome Powell tomorrow is super, super important, right? And I do kind of wonder if now that this event is past, it kind of feels like a non-event to me now. If this makes Jerome Powell tomorrow even more important, it often feels like that happens where, there's a couple of events and it's like, okay, you get the one event out of the way, but then that one event just getting out of the way makes the next event coming up even more anticipated. Basically, we're seeing things in line with what the market expectation was going to be, but we still have a market that is pricing too many rate cuts, way more rate cuts than the Federal Reserve themselves are predicting. And so will the Federal Reserve push back against that tomorrow? Is going to be the big question. And also, we kind of don't want to make the mistake that we made last time, because the mistake that we made last time was, oh yeah, Jerome Powell totally did. He totally was hawkish in his last comments before the freeze. There's a 2-week freeze before the Federal Reserve meeting where they can't talk. But It was more the things that he didn't say. There was things that the market wanted him to say that he didn't say, apparently. So we're going to have to watch that tomorrow. Okay, so the treasuries have come back to about where they were. Like moves like this kind of make me feel a little seasick, man. We are getting some steepening on this, by the way. We are getting some steepening. So the 30-year is almost at its lows. There's maybe a spot here that we're finding a little bit of support. There's definitely a lot of volume trading there at 19 and 19.5. I'm gonna clear my DOM here so I can kind of tell where we've moved from here. Checking, I'm not seeing a whole lot of commentary on Twitter about it yet. I'm hearing my new squawk talk about inversion widening, but then I'm looking at it and it's just like, well, this yield curve steepens, so what is that? There's Zero Hedge has a story about Epic Games losing or winning. Epic Games won. Google lost in their antitrust case, which is very curious because Apple won their antitrust case. And that is going to have some pretty big reverberation effects on the tech industry. I'm really curious to see where that one goes. Actually, I asked a question on Reddit about that. Let's see. Oh, it's people on Wall Street Bets that are wow, I got 932 upvotes on that one. That's one of my more... Usually I only get like one downvote and then they ignore me. But Wall Street Bets apparently liked what I had to say. There was this story on Bloomberg about a couple who had $50 million. And they lost it all. And there was an article on Bloomberg that kind of seemed to blame it on their investment advisor. I think was JP Morgan. Yep, JP Morgan. And but basically the guy had dementia when he told his advisors to make risky plays. So it's actually kind of a weird, interesting story, but let's see here. So I said, I'm not going to bother with the paywall. The Bloomberg digital subscription isn't worth it. But apparently the guy had dementia when he told his advisors to make risky plays. This is what I said. Because remember, I had Bloomberg digital for a year and I wasn't very impressed with it. It's not the terminal. Let's say we put it that way, right? Okay. Top comment top reply to what I said is every losing 0 day to expiration SPY trade I made was dementia. You make risky plays because you have dementia. I make risky plays because I'm regarded We are not the same. I'm pretty sure that he meant retarded, but oh, and he has a special what do they call this? A special flair under his name that says I am a BB bag holder. So you mean BBY? Then that's pretty funny. They claim they weren't aware, sent letters to him and his lawyers stating how risky his plays were and that they were in a field where he was a former CEO. Doesn't sound like a them problem, as his family admittedly never told anyone of his diagnosis. And now they want to blame JP Morgan. That's crazy, dude. But then these other people are like, oh yeah, he's definitely fleecing him. No. Listen, if you're JP Morgan, you don't want him to lose $50 million on these bets, okay? You don't. You make money from having assets under management, so you don't want them to lose money. How will JP Morgan not know about their people's mental health? Well, I if they don't tell you, how are they supposed to know? I know that there's this meme out there that the deep state and the financial system are one and the same. So you would think that JP Morgan has access to all of that super secret spy information that should know that he has dementia, but it doesn't actually work like that. Okay, we're getting a pretty strong rise in the dollar here, and it is pushing the treasuries down. So remember I said, I think that the market should react positively to an inline CPI, but I think that the upside is capped because it looks like they're already trading it. And what we're seeing now, just like more of that, right? We had a big peak and now they're selling off. Now, if this turns into like a real sell-off, then there's something else going on here, right? But it's very curious to me that the dollar is rallying here. It's not over yet. If the end result though today was dollar stronger, that would be a big surprise to me. That would not be what I was expecting. Honestly, I do not understand why government is not cracking down on these practices. I witnessed the same phenomenon with my grandparents. As soon as the financial advisor at the bank realized that the people are old and confused, they tried to invest their money in high-risk plans which do not make sense at all. In the case of my grandparents, they also completely lie. They call them, telling them that the kind of savings account they have is discontinued and have to come to the bank to sign the papers for a new savings account. What they sign is a document which then allows the advisors to invest the money in high-risk portfolios. So if you had a financial advisor, you were retired, and they invested your money in high risk plans, you could sue them. If it was them, if it was the advisors that made all of the plays. I don't think that was the case with this one, right? It was the guy was saying, I want to do this, I want to do this, and then they just didn't question it. They did it, right? Yep, there you go. Here's a person asking the same question. That doesn't make sense unless it is some sort of commission product. Same with this JP Morgan case. Would the advisor not make more money if the client does better because of fees? Or are these advisors so terrible that they are effing people over for a one-time payment instead of a multi-year 0.25% payment? Yep. This is, in fact, how it works. The commission is different depending on which product they are able to sell. Also, these advisors are often technically not working for the bank, but renting an office and data from the bank to sell products from them. Well, okay, that's second part is true, but I still don't think that you would make more money from the commissions on selling of the product than you would from the advisor fees or from over multiple years. Especially if it's like 50 million and it goes down to 2 million, right? That whole thread was kind of interesting that it sparked that much conversation. Wall Street Bets is alive and well, apparently. I'm a little concerned that there's so much of the content over there is turning into cryptocurrency nonsense, but, you know, what you can do. Okay, there was some icebergs and so forth down here in the 1400 area. They traded 18,000 contracts, but now they are starting to push even further. They have their own therapist so they can know about what. Okay, the therapist not call them. I don't. No, he said, I want to invest in this. I want to invest in this. I want to invest in this. And they said, well, okay, we can't stop you. And now the family is saying, oh, you should have asked, are you demented first before you did those trades, is what they're saying. I'm going to be very interested to see where the law comes down on this one, right? Because here's the thing. If I was investment advising somebody, they had $50 million and they were a tech CEO previously, and they wanted to make big bets like that, I wouldn't question them. I would be like, well, he must know what he's doing. He must have some inside track that this is a good investment. Maybe I should invest in it. You know, I don't think that I would be thinking, oh, like maybe he's demented. You know, after he lost $50 million, then I would start to be like, you know, maybe you shouldn't do this anymore. Are you sure that you're okay? I need to make sure that I'm talking to you, you know, but I'm not convinced it's JP Morgan's fault. Oh, this is great. Okay, so I asked, why did the lawsuit against Google? So Epic won their lawsuit against Google for antitrust yesterday, okay? So I asked, why did this one succeed where the one against Apple failed? And somebody went and was able to finally find an article that explains it. The case with its App Store were anti-competitive too. To me, Project Hug was the biggest difference between the Apple and Google cases. Since Apple makes its own smartphones, it didn't have to cut deals with other companies to secure its business advantages. But while Google created the Android standard, it has invited many smartphone manufacturers to make the phones based on the standard. To secure universal cooperation and to keep its Google Play Store strong, Google initiated Project Hug, where it paid alternative stores such as Samsung and game developers substantial amounts of money to use its store rather than to compete with or close competition. So, for instance, with Samsung, Google paid Samsung money to ensure that Google Play was the only app store pre-installed on the Samsung smartphone, aside from Samsung's own store. And Google allegedly paid game developers to use Google Play Store rather than open up their own competing stores. Epic brought witnesses, including former Google employees, who testified to the alleged anti-competitive intent. And then Epic argued these practices enabled Google to extract excessive fees such as the 30% royalties for every purchase of an app, game, or in-game virtual good. Developers had no choice but to go along and pay the fees, Epic argued, and the jury evidently agreed. In contrast to the Apple case, Epic was able to surface witness during the Google trial who said that Google made payments with anti-competitive intent in mind when it convinced game dev and store owners not to compete. The result, Epic argued, was direct harm to consumers in terms of high prices. I see. So they're kind of saying that because of the Apple case, that created enough publicity that people came forward and gave them the evidence that they needed to prove that Google was doing anti-competitive things. That's super interesting. So thank you very much, this guy that deserves an upvote. I'm very, so you got to understand, I am a prominent former member. Should we call it former member? Maybe they redeemed themselves, but on this particular case, I think they're 100% right. I think that Apple and Google, the crazy thing is that I think Apple is the one that's really running a monopoly, because you're not allowed to sideload things or anything. So I'm glad that they won that lawsuit. I think that will be a good thing for tech overall. And, here at Zero Hedge, they put it in their story. They said, breakup of big tech begins. They might be right. I think that some of these tech companies have become too big and monopolistic. And it's a little crazy to think about how much focus and attention was put on Microsoft for its anti-competitive practices and isn't being put on Apple and Google for their anti-competitive practices. Because I frankly think that what Apple does is way worse than what Microsoft was accused of doing. I kind of like Microsoft now. Now that Steve Ballmer is gone, they make good decisions. I like the way that their company is going. Wall Street Bets now rarely makes any analysis. They make bets like gambles. Well, but they were always gambles. I mean, it's kind of funny I don't know if you call this etymology, because that's the origin of words, but going down through the history of Wall Street Bets is kind of an interesting walk, because it really, where it started was these people making these plays on Robinhood where they had found ways to get around the risk controls and done like really degenerate things, right? That stuff was crazy hilarious. And, it really brought that kind of thing to the forefront of people's minds. It really popularized it and set the stage for the GameStop thing. And then it got really, really popular. Yeah, you don't see as much due diligence kind of reports on Wall Street Bets, but the people that were posting, they're still posting there, so you can still find it. But the real problem is that there are so many people that have come into the space that just have absolutely no clue what's going on, and they completely buy into, frankly, conspiracy theories. And that's hurting the space, That was really interesting to see that big order there sitting on the offer. But did you see that? So there was a big offer sitting at, I think it was at 120 even. And then when orders started hitting, it jumped back up. And now it's sitting at 13. So that is highly suspicious, the way that order is behaving. Like, that is classic spoofing behavior, where he is trying to push the market down so he can get fills on his bits or something like that. But you never know. Could be part of a spread order or something like that. The dollar did pull back a little bit, but is heading back up, and that kind of seems to be why the treasuries are falling here again. It's a very interesting. So let me refresh here. Okay, having slowed, I'm going to read about this core CPI. Let's see if there's something hidden in there where the core CPI is not actually saying what I think it does, okay? Having slowed to unchanged month over month in October, November's headline CPI was also expected to be flat month over month, but it printed modestly hotter than expected at 0.1 month over month, which dragged the year-over-year CPI change down to 3.1 from 3.2. This is still above June's 3.1% year-over-year low print. Core CPI accelerated modestly, rising spot 3, with core CPI year over year flat at 4% from October. Most problematically for the Fed and the rate cut hypers is the fact that core services ex shelter rose spot 5 month over month and 4.08 year over year. Okay, that is a problem. So they're saying if you take core CPI and then you take out the shelter component, which we know is extremely lagged and is maybe not very indicative of what is actually going on right now, then we find that inflation is hotter than we would like. If you're rising spot 5%, so basically all of those other components that rose spot 5, that's actually a big problem, I think. Transportation services led the unexpected resurgence. Under the hood, energy declined considerably, but used car prices rose, ... That's interesting because everything that I've been hearing is that used car prices are falling and will continue to fall into the next quarter. 3-month and 6-month annualized rates are down 0.1 and 0.3 respectively to 3.2 and 2.8. This is the first time that the 6-month measure has been below 3% since March of 2021. The actual index of consumer prices hit a new record high this month and is up 17.5% since President Biden's term began. On the bright side, real average hourly earnings rose spot 5% year over year in November. Finally, we bring your attention to a chart we posted 1 year ago showing the correlation between M2 and CPI when we predicted that CPI was about to collapse. So, if you believe, like Freeman did, that the Fed/M2 is behind inflation, then boy, do we have news for you, because M2 dropped, then you should see the CPI come back in a meaningful way. Yes, 1 year later, we were right, but there is much, much more to go. So what happens next? Core month over month, spot 3 to spot 4, and they say the SPX up or down 0.3%. So is this Goldilocks, or does this mean Powell will have to push back harder against the exuberance in the market for rate cuts? Well, seeing the reaction here by the markets, namely the dollar moving higher and the treasuries selling quite hard and steepening across the curve, suggests to me that the market is concerned that that CPI report will be read by the Federal Reserve as the Federal Reserve needing to stay vigilant on rates, and that 4 rate hikes next year is unrealistic. So I suppose this might go a little bit further. I don't know if this is a good place to do it. I'm particularly wary of this big order here. Is somebody going to actually hit it? I mean, the few people have nibbled at it think that if somebody came in with a 3K that it would probably get filled. So maybe that is not actually a spoof. Okay, oil is just taking a dive. Did you see that? Just do. And now all of a sudden it's getting violent over there in oil. Did I miss a headline in oil? We did get Red Book, by the way. Just missed that. That's usually not very moving because we already get that data. Okay, let's read this from Forex Live. Forex Live says the US dollar initially falls on CPI report and then has second thoughts. Here's why. Okay, they did not trade that big order from what I could see, but we did just get shoved down when it disappeared. Hey, minute. Shadev? Is that an Indian name? Welcome to the stream. Okay, let's read this. The market quickly changed its mind about the CPI report. The initial reaction was to sell the dollar, but it quickly reversed, and now the dollar is higher. The market was pricing in 115 basis points of Fed cuts ahead of the report, and that rose to 120 basis points, but has since fallen to 110 basis points. The 1-minute chart of the AUD-USD highlights the confused reaction. I think the algos went a bit haywire here, but there's a good chance the market is buying the dollar ahead of the Fed here because the FOMC and Powell might push back against aggressive cut pricing, particularly for the March meeting, which is close to 50% for a cut. But for the report itself, there were 3 tidbits that are partly worrisome. Headline CPI was spot 1 versus 0 expected. That's a miss, but it's a miss. That's a small miss, but it's a miss. Real weekly earnings were up 0.5 versus 0.1 expected. The Fed doesn't want to see a wage price spiral. And services, less rent of shelter, it was up spot 6 versus a spot 3% prior. That's a category the Fed is watching closely. Again, I think this is more about pre-Fed positioning, but there's also a 30-year Treasury auction to deal with later today. And the auction yesterday was bad. This news might make the 30-year auction today bad as well. I'm from Delhi and I moved to Canada. I'm told that there is a really, like, the Indian population in Canada is really starting to get big. I'm okay with that. I like Indians, but I think it's so messed up when you're talking about a demographic change from immigration. It depends on the political leanings of the people that come through, I guess. Well, okay, so after taking a little bit of a dive there, they are coming back up. I still don't see that big order, so I don't like those ones personally. It's all the diploma mill students that come here. Ooh, yeah. Well, so here's my experience with the Indian community. I work for Goldman Sachs. Just in technology, and there are a lot of Indian people in technology in Goldman Sachs, and I mean a lot. So then they had a very, very active, like, they call them affinity groups, I think is what they were. But they would throw an Indian celebration every year for both Diwali and Indian independence. So I got to talk to a lot of them, and I got along really well with them. I don't know what it is, because I think that I'm a weird guy, and I think that there are some people that just have a tendency to not like me, and they can't even put a finger on why. Like, they can detect the ADHD, and they don't like it, right? But other groups have just shown a strange affinity to me. One group is Jewish people, and another is Indian people. Really, most people from foreign countries, I think I tend to get along with really, really well. And I'm like super open. Like, you're a trader, you're probably open. So you're interested in other cultures and stuff, right? The only thing I didn't like about Indian people is they had no sense of personal space. You know what I mean? Like, you're sitting there in the kitchen area waiting for your meal to finish microwaving or whatever the deal is, and they're literally like 1 inch away from the back of you. It's like, dude, there's nobody else here in the room. You don't need to be that close, right? Just no sense of personal space because they're so used to everything being so crowded. But then I also, when I was in school, there was a lot of people coming to school and doing that too. It's very interesting to me how many of them went into the computer science world compared to other demographics. Didn't. I find that very curious. But there is kind of like a mill. They bring them through, and U.S. companies love them because it's cheaper labor, which is really messed up, frankly. Like, I think it's a little messed up that you import people. You say, oh, there's not enough people here in the US to do that job, and you import them when there's plenty of people in the US to do some of these things. It's actually some people who do 4 years of good school and want to be here and contribute to the economy and blend here. Otherwise, it's the ones who just want to come here to drive big trucks. Big difference. I gotcha. Yeah, no, I totally get this. And it's, so this is a problem like inter-US, and it's not, I'm not even talking about like race demographics, but like what state you come from, right? So like there are people, they will move from California because it's too expensive or whatever the deal is. But really what they're doing is they're saying, oh, I have all of this equity built up in my house. I can move into the middle of nowhere in Utah and have this absolutely gigantic house there. So they do it. So they're moving to get the benefits of the house, and they're not interested in anything about what Utah is right now. They don't like the culture here. They don't like the laws here. They want to change it. And that's what I hate. That's what I hate is you live in an area, you found something that you like, and then another group of people comes in and fundamentally changes what it is. I hate that. And that's why everybody hates Californians, because these Californians, they don't say, "Oh, I hate California. I want to go and live in Utah and live in a place that's more like Utah." No, they say, "I'm going to bring California to Utah. Fuck you. Go away. I don't want you here. I don't want that. I like the way the Utah is. I like that we have really strong liquor laws and that you will never see somebody publicly drunk in Utah. That's a good thing. I hated going to New York and seeing all of these people puking in the curb and, parts of the city that is just open drunkenness everywhere. You don't get that in Utah. It's a good thing. I get that some people like that. Some people think that party atmosphere is cool. Cool. Go to New York and do it. So we're not about that here, Oh, Otto Lucas. Yeah, I haven't seen you in a while. I'm glad to have you back. I forgot how much I enjoy listening to you. I haven't been here in a while. Thanks. I feel like I've kind of been not too political lately, but it was funny. Bring in somebody talking about, and I can't help myself. I get into something political, but it was because in Canada, because I'm actually, what's really going on here is I'm trying to get a sense from Monique. Because when you hear people on the internet, they say that the Indians are just taking over Canada. That they're just it's like the majority they would some people say that Canada has already been taken over by India, sort of a thing. And I don't know how major of a force that actually is. So we know it's enough of a force that, some of the sociological consequences that annoy people are there, but how serious of a factor in their economy and trends and so forth is it really? So you get these people, they're usually far left, radical liberals or whatever, and they think there shouldn't even be any borders. Just anybody that wants to come should come, whatever the deal is, right? Let's come make these people's lives better, et cetera, by allowing them to live in the United States, right? And then these people, they go and get minimum wage jobs, and the people that are promoting the immigration, they love it. They're like, see, this is really great for the economy. It's cheap labor. That is so effed up, dude. You're basically saying, I am in favor of unrestricted immigration that is a negative thing for the people that already live here. And the reason that I like it is because it basically gives me slave labor. That is so messed up. It would be one thing if people, the majority of the people that were coming over here, that their economic outcomes were the same as the rest of the population, but they're not. They're largely low-wage jobs, and low-wage jobs here in the United States right now. It's like, man, in some places, how do you even live? It's just disgusting. And these people, they pat themselves on the back for being all open and positive and helping people. You're literally creating slaves. I just can't think of anything more messed up than creating a slave population and then patting yourself on the back for it. Anything that isn't minimum wage, you start to see maybe 3 to 5% Indians. Well, 3 to 5% is still a lot. So sounds like it is a significant factor, but not as significant as the internet might lead you to think that it's 30%, and it's not even anywhere close to that. Okay, they are coming back here. The dollar is chilling out. So I might need to I think this is a risky situation for me to take in here, but we did. That was like a 40K change in cumulative delta. There was a little bit of a liquidity hold down there, and there was a big spoof that would have freaked me out too, right? So I might have gotten out there. So now that we're coming back up, can we continue to see more selling? That's a tough call because you've already seen 40K net sell, right? On a day like today, it's entirely possible that today could be a 60, 80, 100K day. But I don't have any way of really knowing that. So I think that I should stock, shouldn't say we, make your own decisions, but I think that I should try and stock possibly a short, but I think that I'm going to have to get a really, really good price and a really clear kind of reversal sort of a signal in order for me to take it. So I did kind of want to get a little political today though, but not on the issue of immigration. I don't know why. It was just like, it was on my mind this morning. Sometimes thoughts and ideas will just come to me out of nowhere. That's why it's like, I don't feel like that all of these ideas are mine, even though, you know, maybe it's inspiration from God, but I don't know. This is a super political thing, so I don't want to say that, oh, God inspired me to say this political thing. No, but so I was kind of thinking about the economy and different parties' approach to the economy. Prince Trader, good morning. Welcome to the stream. One of the things that I see a lot is this kind of like liberal versus conservative approach to economics. And one of the things that happened recently was in the UK, they were having problems, remember earlier this year. And the conservatives there said, well, we need to reduce taxes and stimulate the economy. And they did that, and the market hated that because the market was saying, no, this is like a pocketbook problem, and this isn't a real solution. And so that was really like a big conservative failure. And I remember saying on the stream at the time, like, cutting taxes can't be the answer to everything. You know, really, if you know the economy is going strong, the money is coming in, the budget is balanced, it becomes a lot easier to do things like reduce taxes because you're like, hey, we're bringing the money and we don't actually need the taxes to be as high. You can bring it down. It'd be, you know, like, I think that perhaps conservative strategy has it backwards. So we say, the big problem is the tax code. We just always, and they're always focused on taxes. Well, you did that under Donald Trump. It didn't do a whole lot of good, did it? Right? Democrats just flipped it back around. I think that the Republicans need to have like more meaningful reforms to the economy. I think that they need to suggest more meaningful reforms to the economy that can kind of fundamentally transform the playing field in their favor. Because that's what Democrats do, is they suggested a certain economic policy, and it's like makes government bigger, and then that gives them more power in government and more government employees to influence policy, and it just helps them more and more and more, right? And one of the big things, like what could we do that would be a game changer in the economy? Well, I think that one of the big things is that the U.S. economy, the power of the U.S. economy is effectively behind a paywall, right? If you want access to capital markets for funding, there's a lot of hoops you have to jump through. And you probably have to already have a significant sum of money to get access to those capital markets. So a person like me, I have YouTube, I have an audience, I want to raise some money to like start a fund or something like that. Difficult thing to do. I don't have the connections. I don't have the know-how yet. Why would people trust you with your money? If I could market that to my audience and they could crowdfund that sort of a thing, that'd be a different sort of thing. But that's basically like offering security. There's all these things that I'd have to do, and I would need like the help of a big bank, and that costs a lot of money that I don't have, right? We need to remove this paywall. Like, the thing is like, where does like real wealth come from? Like these people that you're getting amounts of money that like just completely transform your life, and you're living on like basically another plane, right? the people that do that, they all do it through access to capital. You get a certain amount of capital, and then you're turning around and investing it to the point where the money that you're making from your capital is having life-changing effects, right? We want more people to get to that point. And what we have done in the United States is we've basically locked people into this investment vehicle where they cannot benefit from their capital investments until they're in their 60s. I don't think that that's the right way to go about it. I think that all Americans should be able to make money tax-free on capital investments until you are making over $500,000 a year, and then you would get taxed at like the marginal tax rate. But before that, you invest in a private company, you make money from it tax-free. You invest in a stock, you make money off of it tax-free. Let's make it easier for people to, move into the upper class through capital investment. Because what we do right now is we basically, we encourage people to invest all this money into 401ks, and you get the match and everything, but you can't use any of it until you're in your 60s. So like if you have a business idea, well, I guess you can take it out of your 401k, but like there's a huge penalty for doing that, right? Very, very risky thing. Probably shouldn't do that. Okay, did you see the bill banning all hedge funds to liquidate their housing portfolio 100 years or over 10 years or be taxed 50%? Yes, it did. And it wasn't just hedge funds. It was basically like anybody with a portfolio over a certain size, I think. So it basically would hamper investment in housing for anybody other than like mom and pa landowners. Yeah. Well, I think that from a political perspective, it's a no-brainer, right? Widely popular, low-risk way to say, hey, we're actually doing something, right? The problem is you're going to go and you're going to pass that bill and say, hey, we solved the problem. And then, 5 years from now, there's still going to be a problem, right? So the issue is that, markets are inelastic, and the housing market in particular is very inelastic. So you would think, hey, there's not enough houses. So that should create an incentive for people to build houses, right? Except for that there's all these things involved in houses. You have to get access to capital, which is quite restrained right now because of Federal Reserve raising interest rates, right? You have to, pass all of these regulations and submit these plans to the city and get them passed. And there's like huge expense in doing all of that, waiting and all the people involved in submitting that and getting that all approved, right? And so there's all these little factors in there that make building a house really hard. So the supply is not very elastic at all. More people are being, moving into wanting to buy a house every day. And we have been underbuilding houses for 10 years. So we have to catch up big time. You're not gonna get there without major changes. Well, the guys in Canada, they're talking about this, and they actually have good ideas. They're actually saying, hey, cities, if you do things that increase the number of houses that are being built, then we'll give you these goodies. But if you don't, you're going to be punished. So you better go in and change some of your laws to make it easier for people to build houses. That will have a big effect. They're directly, investing in and I would even say subsidizing building of houses. You gotta. I think that you need to have some of that because basically, because of the structure of the market, we have an untenable situation, and we have to resolve that problem in the structure of the market that's causing that. And it's not that people that large investors can buy up homes, right? I mean, that might mean more house. Wall Street being investing in houses. That could mean more of the new construction ends up being rents instead of buy, right? For sure. But it's not why houses are so expensive. There's a lot of people who seem to think that like that's it. We just get them out of the market and then the problem will solve itself. No, you're not building enough houses, guys. Since 2008, we have basically the construction industry got savaged in 2008 and never really recovered. Is really what happened. Oh, Ahmed, I watched your playlist of Dom Basic Knowledge. Guide me to another playlist. Oh, man, I don't know. I think that if you've watched that and you really want more, you need to start reading books and stuff. Okay, historically, how often does CPI news change a market trend, or is it at least an inflection point? Okay, so for the treasury market in particular, CPI news is an A tier, S tier event. So I think that a lot of people, I was kind of seeing some of you guys in Discord talking about it. Like, it used to be that a year or two ago, CPI was like the only data point that mattered that month. It was everything to the market. It was like make or break the rally sort of a thing for every CPI report. Now, the market doesn't price nearly as much volatility around it. But for the treasuries in particular, CPI is a really, really big data point. Second only to the non-farms payroll, really. So it's a super important one. Now, is it an inflection point? I mean, like on a daily basis, that's a more complicated thing, right? Because what drives the flows from day to day changes really fast and is incredibly inconsistent, okay? I think I would say that the result that we're getting from here right now is that the market is really starting to latch onto this mispricing that the Federal Reserve says we're not going to cut rates for a while. The market says you're going to cut rates in March, and then you're going to cut it 4 more times after that. And that just doesn't match up with the data or what the Federal Reserve is saying. And so they are selling it here. So does that make today an inflection point? I'm kind of, but that doesn't mean that they can't buy it tomorrow. Tomorrow will definitely be the blockbuster day, right? But the Federal Reserve meeting tomorrow will be very important. So I want to highlight for you in 2018. So if you're ever here at the start of the stream, I have a little intro bit that plays at the beginning to prepare you for the stream starting. And one of the moments that I have in there is I'm like, yeah, you're saying everything is fine, but everyone thinks you're crazy, right? That was taken from the 2018 December Federal Reserve meeting, where the market largely anticipated the Federal Reserve to hold off on raising interest rate. Well, not expected, but basically the market thought that the Federal Reserve should back off, and they didn't. They're saying the economy looks weak, you shouldn't raise interest rates this time, but the Federal Reserve pushed through with it. And that led to a complete rout that December. They recovered it in January. It was a buy the dip situation, but basically the December meeting happened, and then the whole rest of the month was just like crazy dismal. And usually the market is completely dead in December, but like they took advantage of the lower liquidity and just sold through the whole holiday. It was super crazy. So the thing that I'm trying to point out to you is that because of the seasonality and all of this sort of stuff, the December Federal Reserve meeting can have the ability to affect markets a lot more. Because if we have a Federal Reserve meeting and Jerome Powell is crazy hawkish at that meeting, and the markets decide that they have to sell off because of that, that can mean the rest of the year-end rally can be really hampered. And I think that is probably a major concern right now, because I think that they probably are going to come in and push back against the market pricing. I think they kind of have to. Now, for the S&P 500, it's not as major of a thing. Depends on, if the CPI actually tells you something significant, if there's like a significant change. In today's instance, it looks like it's a key thing for the S&P 500. Now, I'm a bet. I think if I was going to day trade this, I would anticipate that they sell it a little bit further and then later in the day recover most of it, right? Like there's been this mean reversion behavior in the S&P 500 that's been incredibly strong. Incredibly strong. You know what? I have this little thing on the indicators, and I don't want that prior date open, high, low, close label on there. There we go. I want to be your best student, but your language is a little hard. Then, oh, I'm sorry. Yeah, well, read books. Read books. Read books. Read the financial news. Come in every day to do the work. That's what it's really about. I think that a lot of you want to come in and you just say, if I absorb everything that Seth knows, and then I'll be able to trade. No, it doesn't work that way. You're building a neural network in your mind. That's a process that takes time. And part of that process is, like we're talking about right now, like you sitting and listening to you, it's helping building that network, because I'm explaining to you what we saw in that CPI report and why the market is possibly reacting to it the way that it is. Ben Shapiro tweets, Democrats refusing a border compromise in return for Ukraine funding is totally idiotic. So this is a key one in politics that you're going to see a little bit later. And he is pointing something really important out. So Democrats are throwing Republicans are refusing to fund the Ukraine war. They're going to cause Ukraine to lose, etc., etc., etc. Okay, true, but all you have to do to get the funding is to pass a bill that secures the border. So really what this is Democrats care more about keeping the border open than they do helping Ukraine. Their Republicans are forcing the Democrats to choose, and the Democrats are choosing to not do anything. It's pretty wild. It's pretty wild that they can't make a compromise on that. I think that's a little bit telling about what the Democrat Party is doing with the border. Man, okay, so maybe, I was saying maybe I should stock the short, right? The cumulative delta was flat, so I kind of didn't really do a whole lot. We're moving back down again. It looks like it's again being driven by the dollar coming back up. Started watching old live videos. That's not a bad thing to do. But before you do that, the first thing that I would say is read all of the last economic reports. If English isn't your first language, that's going to be hard too. But that's one of those things where you kind of have to push through it, right? You won't understand everything that you're reading, but if you just keep reading them, eventually you will. Just got to get over that hump. I guess I should probably reset here. Here's the S&P 500 open. The 30-year just puked major. Where was the breaking point? 02. So there was about 4 ticks stop run there in the 30-year. So I didn't get the kind of clear open opportunity that I wanted, but it does look like that was kind of the move that I needed to take advantage of. So I don't know if they'll give me another one. We could make the play on the bet that they'll break through here and we could get $10 from it. Isn't you think Israel-Palestine war changed the stock market. Need to take crazy drawdowns. Give it so much room to make money, not worth it. Yeah, it really is a little bit. You know, like I said, yeah, I want to minimize, you know, the adverse excursion in this situation, and the chances of it, like, you know, coming by all the way back up to 17 with a vengeance, I think is really high. So even though it really looks like that they're going to break through, I don't think I can really participate on this one. So, I don't know if the Palestine-Israeli conflict will necessarily have a super strong influence on the stock market. Definitely did affect some of those Israeli stocks and everything. But I think that the majority of the impact is past. It's going to have a major impact on the world. So if you're investing on a higher time frame, then I think it's a different story. What happened in Israel is possibly as major of a world-changing event as 9/11 was, because it just completely changed the situation in the Middle East, and it'll take some time to see if that's good or bad, but Jahil, there you are. We were wondering where you were. A little late. On a CPI day? Guys. Okay, so the 10-year went for a new low too. Only by a tick or two, but you can just see it crashing down there. That's some pretty aggressive volume too. There's like 4K, like the liquidity below us is stacking as they trade into it, and they just keep plowing through it. I would not want to be those market makers, I tell you that. Okay, well, back to the scene of the crime, it looks. S&P 500 open. Not very, first 3 minutes, they haven't really done a whole lot, have they? You think it could bring things to World War III? I think that there was a chance of that happening, but I think that risk is largely past. If you go and look at what's happening, Israel has conducted its military operation. Hamas is basically been decimated. You've seen all of these videos, like the number of Hamas militants surrendering and so forth. So they're still searching for the head commanders. Basically, what we're being told is that a lot of Hamas fighters are saying, okay, you know what? This is pointless. There's no way that we can win. It's and this is so bad for the people. There's absolutely no point in resisting any further. But the top brass in Hamas are, you know, basically delusional about it. So it's going to go on for a little bit longer, apparently. But they're going to clean that place out. So now the question becomes, what happens to that area after they're done with their military operation? Do they just occupy it again for a few years until they feel like they have it under control? And then, okay, so there was a stack there at 09 that pulled. Which is kind of how we got Hamas in charge over there in the first place. What are they going to do differently? I'm curious to know. But I don't think that it will lead to a world war, right? Basically, what happened is when that happened, they wanted other countries to get involved, and the United States went and put a carrier there and stopped it. So I think it may actually be the case. A lot of people the wrong way, but I think it may actually be the case that Joe Biden prevented a World War III there by putting those carriers in the sea. Watch the No BS day trading video on the DOM, and now I finally understand what I'm seeing. Cool. Make sure you watch my order flow video series, because I have stuff that you're not going to find anywhere else that I think will illuminate what we're really seeing here a little bit further. So they did go bid there at 09 briefly. It's not stacking again. That big order at 09.5 is still there. Something we might see is if we tick down a few more, if you see that follow it down. Nope, actually it disappeared. On that move, we did not see the yield curve continue to steepen. In fact, the yield curve is actually flattening now. I think Yemen is, well, Yemen, yeah, Yemen is already at war, though, right? Yemen is already doing like everything that they possibly can to inflame the situation, and the West is just kind of like batting them off like they're a fly. So, I think that they'll come in, they'll try and rehabilitate Gaza. I think that other Muslim countries like Egypt will get involved. I think that Egypt-Israeli relations will probably continue to normalize. So I'm hopeful about the future. I really am. I think that I hope that in the end this ends up being a good thing. But only time will tell on that one. But I can see a future where you and I are enjoying the beach in Gaza in a few decades as like a beach destination. I think it could happen. I think that there's a future where that could happen. As crazy as it sounds. I don't know, that last. So the low before this was 10. So after there was 10, there was a little bit of like stop run kind of behavior and a lot of volatility. But this trend starting from 16 has been incredibly consistent. And not a whole lot of volume in the 10-year accompanying that. Well, about a 10K drop. But through most of that, it was actually flat. So it seems that this move is kind of more the dollar moving and people stopping out in treasuries. Perhaps market makers getting rolled over on that because of the correlations. I don't think someone take us a hostage. Well, but that's what I'm saying is that like, so, for a time, let's just remember that Israel did occupy Gaza for a long time, right? And their soldiers were constantly under attack there, and then eventually they left and let them have an election, and then they chose to elect Hamas, and now we're in this situation, so they're going back and occupying it. Israel needs to get better at rebuilding. I think that they're more into that now. So, like, one of the things is Gaza doesn't have a port, right? They wouldn't allow Gaza to build a port because they were afraid that they would just use that to smuggle weapons in, right? Well, if you've completely decimated Hamas, you create some sort of so they were saying maybe Hezbollah can have it, maybe Palestinian Authority will be involved, although the Palestinian Authority kind of got kicked out of Gaza, so that's why I think they're talking about Hezbollah and stuff like that. But, and I know that this is kind of like a pie in the sky dream. Don't get me wrong. This is kind of a pie in the sky dream. But they could build a port. I think that to really rebuild Gaza now, because they have just absolutely destroyed the place. I mean, they have just absolutely destroyed the place. They're going to need a port. They are. They're going to need a port to rebuild Gaza. They're going to build a port there in Gaza. Maybe this time they can build a real economy there. And I think that Israelis understand this better than they did last time, because they were already doing things to help the economy in Gaza. They were giving Gazans jobs. There was people that were allowed to cross the border and go and work in Israel every day and things like that, right? So, yes. And again, this is maybe a crazy thought, but, I think that there could be some good beachfront opportunities in Gaza. It's a desert. It's a desert area. They're right next to the sea there. You could build a resort. Yeah, that would be a really great thing for their economy. It would take a long time. But can you see? Yeah, casinos. There you go. Can you see 10 years from now if they truly root out the terrorism in that place, and the economy's building there, and so because of that, then people, business leaders feel confident in doing things like building casinos and resorts and stuff over there in Gaza. He could totally, and I think you go and you do it just for what it says, the success that this place that was the site of one of the most sad conflicts, ongoing conflicts for decades and decades and decades, and they were able to work it out, and the people there are prosperous now. I would really like to see that. And so I'm not saying it's going to happen, but it seems to me the best case scenario is Gaza becomes a desert paradise. Nah, I don't think that they're going to do that, Tyler. I've actually seen that one too. One of the things I think is so funny, this is not a subject that I'm like sitting and like studying all of the time, but I just consume so much content, and you don't realize how much stuff you pick up. So there's this conspiracy theory out there that the reason Israel is doing all of this, that Israel let Hamas attack them so that they would have an excuse to go into Gaza. And this is all so that they can create their own canal to rival the Suez. Okay. The infrastructure that would be required to build that canal would be insane. There is almost zero chance that they're actually going to do that. Like, this is one of those things where, like, they toyed around with, like, oh, we could use nuclear bombs and put them in there, and that would dig it out. But the reason that they were talking about doing it in that way is that they would like to build a canal, but it's too expensive. It's just too expensive. So, yeah, it's not going to happen. That one's not going to happen. That's just a crazy conspiracy theory from people on the internet that don't really understand a whole lot about the region. So actually I can... Okay, so like... I'd turn it on with this satellite, I guess. Terrain, okay. You're talking about coming up the Gulf of Aqaba, whatever that is, right? From the side of Saudi Arabia here, right? And then, like, look at what's here. Okay, those are like freaking mountains, dude. You can dig through that. Okay, like look at that. Look at the Sinai. This is very different. This is like this was a low area that already kind of had water in it anyways. Okay. This is a simple thing to just, make the canal from here to here. Okay. You're talking about a canal that is like literally Like, look at this. Wait, how do I do this? Measure or measure distance. So I can go from here to here. Okay. So the Suez Canal, the like the long part of it, is that am I getting that right? Yeah. Oh, actually I need to go to there. It's about 50 miles. Okay. Is the Suez Canal. The canal that you're talking about building through the Gaza Strip. Okay. Is oops. Where'd it go? Measure distance. Literally 3 times longer. It's really an insane. Well, let me try that one more time. 130 miles. 130, 150, depending on where you come through in it. And it's through mountains. Yeah. Actually, wouldn't it be more like from here to here to here? Yeah. There's almost no chance it's going to happen. The idea that the whole conflict is happening because they want to build a canal is like just so absolutely nuts. Right? Like what? Let's see here. They want one connecting the Jordan River and the Dead Sea with the Indian Ocean. Like what? From here to here? Like through Iraq? Are you kidding me? Are you kidding me? No, that's the Arabian Sea. How would you get one all the way to the Indian Ocean? Well, I don't know how that doesn't make sense. Israel is essentially building the moat. No. Okay, so yeah, but you're talking. So this is the Jordan River, right? My geography of that region isn't the greatest, but I believe that this is the Jordan River. Empties into the Dead Sea, right? How are you gonna get it all the way over to the? Yeah, runs north-south. Where are you talking about? You saying like so here's the river, right? You're saying like you're gonna go all the way over to here or something? I don't think that people understand how big of a project building a canal is. Like they think, oh, yeah, there's this huge splat of land. We can just go through here, right? No, doesn't work that way. Like, okay, the Suez Canal, okay, is an area where there's basically already like a river and oceans and stuff there, and they only had to connect this little area, like 50 miles. It's only 50 miles, okay? Or like, let's go over to the Panama Canal, okay? That one's a little bit more interesting. So the Panama Canal, where does it come through? Am I getting it wrong? Oh, yeah, okay. It's this thing. So again, there's already like this huge lake, right? There's already this huge lake. So you have to come through. So they had to build this. And then I think they had to like, oh, there's actually maybe a dam here. I think there's a dam or something like that. And then this part right here. So again, it's like 50 miles, I think. Oh, that's only 10 miles. Okay. And this was incredibly difficult to build, by the way. Right? Like there was like other people tried to build a canal and like they failed, and then the US came in and did it. Like, okay. So you guys are talking about these canals over here that are like hundreds of miles long. There's nothing in anywhere that would be even remotely comparable. There's nothing that would be even remotely comparable. I'm still sitting over here like how... Yeah, so I'm right. That's the Jordan River. That's the Jordan River right there. How do you connect that to the is it to the Gulf of Oman? Like to Kuwait? You want to go from there to Kuwait? How it, because you're not going to get all the way over to there, right? That doesn't make no sense. You got Iran is in the way. To the Red Sea? Wait, isn't the Red Sea the Caspian Sea? Red Sea. Oh, wait. Oh, this is considered the Red Sea. Okay. So you are, well, no, you're still talking about the same one that we were, the same one that we were talking about. Yeah. So the proposal is, or rather the conspiracy theory is that they're going to go from here into the Jordan River, right? And then across Israel here into the Gaza Strip, right? And I'm just saying, that's like 150 miles through very difficult terrain. There is literally no way you can build that. It would be insanity. And the idea that anybody thinks that they're going to build that so strongly that they were going to go and just literally, you know, allow a false flag attack against your country and then go in and utterly decimate Gaza all for a canal is just so absolutely batshit crazy. I can't believe that anybody would ever actually even believe that. Like, the issue with this conspiracy theory is that canal is practically impossible. This is like somebody looking at a map and saying, well, that doesn't look too far. Like there's water here and there's water here. Why wouldn't they build a canal? Right? And then thinking, oh, that's totally possible without actually like being there and knowing anything about the area. Right? Because I guarantee you, if you live in Wadi Musa, go and talk to the people in Wadi Musa and ask them if they think that they're ever going to build a canal from the Gulf of Aqaba over into the Jordan River. Because I think that they'll call you crazy. Like I'm not an expert on the region, and I'm just like look, dude, these are fucking mountains. Okay, you build a canal through effing mountains, right? Like these canals over here are like you're digging, and it's, you know, it's kind of lowland areas anyways. You're like talking about blasting dynamite. Like you're gonna have to like blast dynamite and crap to get through here. It would be absolutely insane. I wish I could see, does Google Maps have a way of showing us elevation? Elevation shown on Google Maps. What do we hit? What do we call this? Where they have the lines? Topographical map. Maybe not. Maybe we just want a topographical map of Gulf of Aqaba or of the Middle East. Let's just try that. Of the Middle East. I want one with like the lines. What do they do that? Is it a GIS map? What's that? GIS map? Oh, well, tell me the GIS maps in my area. Contour lines. I'm not getting, so this is probably the best I'm gonna get. So, to come back here. So you're saying like the Dead Sea is below sea level. True. But what you're not seeing is that like, okay, the move from here into here is like really steep. Right? This is not soft terrain. This is like rocky shit. Yeah, there's lots of stuff in that valley too you'd have to go through too. This is just a road. But especially when you get into here. And then you also have to consider that it is just a really long route. Like building a canal that long is super hard. Earth Pros will show it. Anyways, the reason I saw this was because like I saw some experts on the region talking about this and talking about all of the challenges involved in building a canal. I'm just telling you, it's a conspiracy theory. No sane engineer that actually builds canals would be like promoting that you'd build this, okay? It's a conspiracy theory and it's not going to happen. I would literally bet, well, I don't know how much money I could bet, but I would literally bet money that it wouldn't happen. Except for that, it's one of those things that's like, okay, but when do you get me the payout? When it doesn't happen in 30 years? There's no way it's going to happen. No, I don't think that that's probably not true either. So, the the big, what is the word, contention on this is that that the attacks on October 7th or when was it? In 2 months, right? That they were allowed to happen. That's not the case at all. So yes, Israel has a very sophisticated apparatus. They have stopped similar kinds of attacks before. They have. But I mean, the thing is you have a determined enemy. They're going to study you, figure out where your weak points are, and there's going to be, people are going to make mistakes. And so really, it was inevitable that this was going to happen, right? Sooner or later, the terrorists were going to figure out a way that they could do something to come over. And when you kind of look at the attack and everything, it's kind of like, it's not actually that hard. You got to remember that there's like nothing out here, okay? Like these towns like Sirdat, okay? That's fucking tiny. The city that the town that you live in is probably bigger than Sirdat, right? This is fuck nowhere. All right. I mean, it's not until you get into Tel Aviv that you actually have like a real metropolitan area. Okay, and even Tel Aviv isn't massive, right? It's in the middle of nowhere. They had like one military outpost over here, which was attacked. This is a huge area that they had to cover. A lot can happen. It took them several hours. This is just the way. Get me thinking about what happened and everything, and that really sours my mood. So they did, Treasury did pop back up here, but they kind of seem to be settling back at the scene of the crime. So I don't know if that's one that I can take a trade off of. I'm really disappointed, but that I didn't do anything. I guess I could have, in this situation, I wasn't informed enough to know that this part ended up being really important and the market started moving off of that. So I don't think that I could have taken a trade, but it kind of sucks to see it do that. And I want to go short, but it doesn't. I'm not really seeing a good opportunity for me to do it. Okay, you mentioned on one of your order flow videos that if orders on Xeon drops below 600 on the bidder offer, there's a good chance price will move to the next level. How do you use volume stop on Jigsaw to exploit? Yeah, well, so if I have a volume stop somewhere, I'm gonna probably have it below 500. So I think, I haven't used the volume stop over there on this new computer yet. But I'll probably put something like 476. It's always going to be like a really random seeming number, right? But basically to say, I only want to hit into this if they're very likely to go. So 600 is probably not enough in this situation. But I could have one that's like 300, then it's a real stop. Because the issue is that if a regular stop, if anything trades there, then you're hitting into it, and it'll be like, one order will hit, you'll be stopped out, and then it doesn't go through that price, and that sucks, right? So if you put the stop, if you use a volume stop, then you're basically only going to hit into it if they're going to clear it. But you also risk possibly stopping out at 13. So losing an additional tick. So there's a risk to it. I find that sort of a one works a little bit better with like stopping into a trade, right? Like if I really think, this 115 has been tough. If that hits, it's going to be a breakout, and I want to get into it, and then I can do that, and that will try and catch the edge essentially. But the thing that I was kind of alluding to at that part of the video is that there's this really strange mathematical property where, like, okay. It's 500 lots versus 2,000 lots. Okay. What are the chances that those 500 lots pull or that those 2,000 lots pull? Well, you're going to have a certain amount of contracts adding and pulling at a constant rate, right? And the thing is the more orders there are at a price, the more orders there are to cancel. And so because of that, there are kind of like these equilibrium points where it's like it's likely to settle, and you can kind of just see it. So like right now it seems like it's like 600, 1200, 1500, 2000, and you'll see it kind of shift between these amounts, and that has to do with these mathematical properties of it. So as you're watching it, you'll kind of get a feel for where those spots are, and you'll kind of see that, oh yeah, they get below 600, everybody starts hitting it, trying to catch the edge. Auction days are the hardest to trade. Yeah, auctions can be tricky. I'd say they're easier than they used to be. They can still be tough, for sure. On a normal day, when I see buyers clearly winning, the price goes up. So, yeah, but so the I think it's been different. See, the thing is the auctions since since COVID have been kind of weird and different. But yes, when there's an auction, you tend to see a lot of big icebergs, and it can be really confusing. And it's very confusing to try and sort out what's going on. But it's kind of funny because, well, like yesterday was a really good example. Like you just wait for the auction to happen and then buy it afterwards. And that almost always ends up being a good, like that's one statistical behavior that we see that's you could probably make money on. I think that the risk is probably too big for most people to hold, but there is a real statistical aberration there. They tend to sell into the auction, and then after the auction, they buy back up. So you just wait for the auction, especially if it's a tail and it goes down, and then buy the dip. And would have made you money yesterday, right? But there's actual studies on this. You ever use small tick charts to more easily visually detect iceberg orders? Price hits a solid wall and creates a perfect line in the chart when this happens. So I think that there are many ways to see icebergs on a chart that are pretty effective. Sure. I don't really find charting them that useful. Okay, so it really bothers me that there's some people pushing this canal thing, so I'm kind of pulling up my sources and finding the stuff about it again. So if you want to like search about it, they call it the Ben Gurion Canal, Gurion. And basically the reason that it kind of came about was because there was a classified military document that proposed making this canal because of the concerns Israel had about if the Suez Canal got closed to them. Okay. But if you read the document, you will realize how unrealistic it is. So I'm just reading from, this is fathomjournal.org is where I found this one. The construction of such a waterway would be a highly unrealistic and uneconomical project anyways, and this becomes clear as soon as you read the 1963 document. It would probably be the largest construction project of the present day. The canal was to measure over 250 kilometers in length, and in some places it would have to be dug up to 450 meters deep into the desert floor. As this would be too costly using conventional methods, the author of the concept suggested excavating the canal using nuclear detonations. Right? So that's the whole thing. The whole thing is that they thought they could make it work because of using nuclear weapons, which we now kind of realize would be like super stupid and crazy. Okay? How are you going to dig that? It's just not economically feasible. Too far. The terrain is not favorable. It is a conspiracy theory. And if you're finding people on social media like pushing that stuff, they're probably people that aren't helping you. I don't know if I need to say anything else about it. I find icebergs to be very good entry points when I'm already... Well, sure. Sure, but that's just... I see the iceberg happening right now. Like, once the iceberg is gone, it's not very useful to you, is it? Let me come back and see if there's anything new on Zero Hedge. David Sachs all-in fan account banned on Instagram, really? And that's why I don't use Meta. Oh, so he refused to even have one on Meta, so somebody else made it, and that got banned. That's funny. So let's just reread this story. I think that they may have updated it. Nope, it's the same story. Supercore. Have you ever fooled around with OCR? Like, why would you need to go into OCR? So, the easiest way to do this, not the cheapest, but the easiest way to do this is to subscribe to a Bloomberg terminal and have your robot read what comes over the Bloomberg terminal squawk. and then process that with a large language model to determine whether that news is positive or negative. There are robots that do this. I think that some of those robots, like something that you'll see happen is those factors will get really strong in the market, and then you'll get one of these situations where there's a headline and the robots react to it the wrong way, and they get screwed over so hard that it stops being a thing again, and it kind of goes in cycles. There was like that during the Trump time, was really strong, and I think that a lot of those robots got screwed over by Trump. So it can kind of work. It can kind of work. You know, if you're really trying to be fast. Tell you what, oil sure got hit hard today. 68.8. They're recovering, but they got smashed. The S&P 500 did end up selling a little bit more and is already kind of reverted back up. So hard to guess what that's going to do. So one thing I'm thinking about right now is last Friday. So last Friday, we had a strong move down. The pullback was much deeper than I anticipated, but we did end up getting another leg. It's just it didn't happen until like the very end of our session. And when I come in and I look at this, I see a little bit of a meta order. Let me pull this back up so you can see what I mean. Okay, so one order was the initial news. So this is the one that I probably should have sold, and I just did not see it happening. I was just like, well, here's $1 going. I don't know if that's going to continue or not. Now I kind of understand the report a little bit better, and I can see why they were selling. Okay, this is the post-meta impact order. And then this right here, and it was only at the very bottom of it, funny enough, was stop outs. There was stop outs. But then since then, you see how it's flat? So there haven't been any meta orders in the market since then. And that happened at about, I can't see it. That happened about 7:30. So we're past the point where, like, if we were going to get another meta order, I think we would be seeing it. If I come over and I look at the chart, I'm seeing pretty good liquidity. There's icebergs trading in here. So if I was somebody that had a huge order to sell, I think that there's a healthy market for me to do it in. But then I think back to Friday where it was the same thing, and they didn't end up doing it until after the top of the hour here. So I'm kind of suspicious that they might do that again, that it'll kind of not do a whole lot of anything for the next 45 minutes. And then after that, when we're going into the European close, we start to get another move, and it could be a move down. But the alternative possibility is that we're already about 60,000 contracts short, and that's about all that people want to do before tomorrow's FOMC. But it also, this whole thing makes me very concerned for the FOMC tomorrow, that the FOMC will be hawkish and really slam treasuries back down. So ultimately, the thing is like, what is like information that we have now that can potentially predict the future, right? And autocorrelation is something that can. If we know that a stock is autocorrelated and is likely to continue to be autocorrelated, then that means it's just going to continue to run in a trend, and you can make money from the trend, right? Well, one thing is a net imbalance between market buy and market sell orders. And we know that those are caused by these large meta orders. So if I see something that's like a large meta order, then that's something I can jump on. But right now, we're not seeing that. Cumulative delta is mostly flat. we're moving more on moves in the dollar more than anything else. And so that doesn't really give me a very good trade, does it? All of these other things like icebergs and so forth, they're interesting. We want to pay attention to them, but they aren't very effective at telling us what the future direction is going to be. Market orders, I think, are kind of your best kind of technical signal, right? And even then, I don't get in unless I have some reason to think that there'd be a meta order coming through, and then I'm starting to see the market orders go with it, which really limits my trades sometimes, but it keeps me out of a lot of problems too. Never rule out stupid is an important, often forgotten lesson when trying to predict what people will do. Well, I think the thing that's funny about it, though, is that I think by and large, the meta orders out there are quite reflexive and really easy to predict if you know something about the people executing it, right? So it's like in the S&P 500, if I'm an index fund and I got more contributions, significantly more contributions this month than withdrawals, then they're going to buy it up. And you just know that they're going to buy it up. Like the determining what they're going to do is so simple. If you had the inside knowledge, which we don't, is where the kind of the problem is. But then we have the ability to come in and read the macro environment and everything else and sometimes suss those out. You know? So it's not even like being stupid, right? It's not like some crazy guy just decided to buy or sell it today. I mean, that's what you're left with in the cryptocurrency world, but in the treasuries, like these are really huge funds and sovereign wealth funds and stuff that are doing this stuff, and a lot of it is mechanical. Aren't block orders? So when I say a meta order, right? That's something that, like, if I'm seeing it, if I'm seeing a meta order executed, let me put it this way. Okay, they went and they did a study and they said, let's just look at a random. We will at random select an order, and then we say, is that order a buy or a sell? Market buy or market sell? Then we will wait an hour, and exactly an hour from now, we will pick another random order. And there is a 0.05% chance that if the first order was a buy, that the second one will also be a buy. Okay, so there's a statistically significant chance that it will continue to be buy. Why is that? And you will see it in the markets. Imbalances tend to be persistent. If we're consistently moving down in cumulative delta, we continue to do so for a long time. And a lot of these are things that take literally all day for them to execute. So if you have some idea, now the thing is they're really clever about how they execute it, right? So that, like, by the time it's obvious that that's happening, right? By the time it was obvious what was going on, you were down to here. So then it's maybe like it comes down and it almost immediately comes back against you, right? You were too late. You would want to be in, like, getting in through there. It's coming down. You're seeing it in ZN. You're seeing the cumulative delta start to turn. You maybe could have gotten in around 110.20, and then you could be getting out right here when it becomes obvious, right? But that's the whole thing is like if you know that the meta order is coming, and all you need to see is a little bit of volume to confirm, and you can get in very, very early on trends, and you can, and again, you can hold them for a really long time sometimes. I mean, frankly, if you really wanted to go for it, this was maybe a good opportunity for a swing trade, right? Take it at 110.20 and then hold it through tomorrow's FOMC on the theory that the FOMC is going to hurt the market. So that's what I'm talking about. I'm not talking about block orders. Block orders are like where a trade takes place off exchange and then is later reported to the exchange. And it does seem that like I will hear it on my news squawk before I actually see it show up like in the market. You can kind of trade around that. That's not what I'm talking. That's not the kind of block that I'm talking about. So the term block order is a term that gets used in a large number of different contexts, right? So there are like block trading desks. And the reason they call them that is because to the client, it's a block. The client, they just say, I want to sell this huge block all at once, and they sell it to Goldman, right? And Goldman will say, okay, here's the price that we can give you for that amount, right? And Goldman then turns around and executes that order at the market, right? So they have to know how far that order is going to move the market and what the conditions are in order to give them a good quotation and to give them enough room to make money from it. But when they execute it, you know, their whole thing is if it's a really large tranche, it's going to affect the market. It's going to move the market. And what we learned from Almgren Chris is that reducing your impact on the liquidity is helps you out the most. So they will kind of do it in waves. They'll come in, they'll create the liquidity hole, execute in the hole. 45 minutes, they come in and they do the other push, right? Well, what if you just had news? All this other crazy stuff, right? Well, it seems that sometimes after that news that they wait longer. They wait longer for a time where the market really seems like it's calmed down and everything, and then they start executing it. So it might be 30, 45 minutes from now, maybe we'll see another move towards the downside. But there's a good chance that they're done today because we did move a lot. And we did move a lot of volume. So that's kind of what I mean. So I wouldn't call volatility autocorrelated. There is some autocorrelation in equity indexes sometimes, right? So when money is the key thing to understand is that autocorrelated price is really too simple of a way of looking at it. It's what it is it's autocorrelation in the sign of orders. If there's an imbalance between buy and sell orders, that imbalance tends to persist over a long period of time. Okay. And that will tend to lead to a trend in price, but not always because of liquidity conditions and so forth, right? Now, volatility, I wouldn't... Oh, okay. So what I was going to say is in equity indexes, when the Federal Reserve is aggressively pumping money into the market, you will get very strong autocorrelation effects. Things where like R2 will stay at 0.9 for hours. It's like in 2021, there was some of these trends that were just absolutely insane. And I made a video about this, by the way, where I talked about R2 and shared the strategy. It worked really well in that market. Probably didn't work very well in the COVID market, but... probably didn't work very well in the market since that time, but I digress. Now, volatility, there are some interesting statistical properties of volatility, but I wouldn't necessarily call it autocorrelated. So the interesting thing about volatility, and this is an effect that you will see all over the place in markets is clustering effects. Clustering effects. So if one day, if we're sitting around and VIX is really, really low, and then one day something crazy happens and the VIX just goes like skyrocket high or whatever the deal is, right? Okay. Well, if it was just like a random aberration, then you would expect volatility to just come right back down. And then there's nothing to it. But that's like never what happens. There are clustering effects. So if you had a really volatile day today, it's a really good chance that you should get a really volatile day tomorrow. And eventually it dies out, but it clusters. So that's when volatility spikes up, the trade is to sell the options as everybody's going in to buy them. And this is a very, very risky trade because if things get worse, then you're going to blow your account. But you can make a lot of money from all these people buying the options, and then the volatility dies down and nothing happens, right? So volatility clusters. Orders also cluster, right? So you will see where like there's just nothing going on. Seeing it right now, really. There's like hardly anything going on. No orders have come through the market for several seconds. But I guarantee you, if we see an order come through, there will be a couple of others follow it. Well, still pretty quiet. But orders tend to cluster. So this leads to some other really interesting statistical stuff that I don't understand, but basically they can come in and they can say, well, I expect to see, based on the past, X number of orders, right? I'm going to see X number of orders per minute, but they aren't going to come in consistently. It's actually like I sit here and I say, okay, I need to be able to handle X number of orders per minute. But actually, you need to handle a lot more than that, because what's going to happen is they're all going to cluster and they're all going to come in and hit you at once. And then that's going to be more than you anticipate. So the market making algorithms have to account for that. Clustering effects. Kind of browsing around the internet, see if there's anything interesting going on. Man, the Epic Games wins antitrust battle against Google is a huge story on Reddit right now. Is KDB an overkill in fixed income? Maybe. KDB is used for anything in trading. Really is great when you need the code to run quickly, and that's not limited to FX shares or commodities. Problem is it's a pain to use, and it's now becoming a legacy system. You might have to maintain and rerun old systems using it, and you'll definitely come across it, even in FI. But I'd be surprised if anything new is built using it. It's just old now, but there's nothing really wrong with it. It depends. Yes. I would say KDB is really useful for when you need to add a lot of things together. You need to make a lot of calculations together. Then it's worthwhile. Let's see what this guy says. Depends. KDB works well with time series, so if that's what you're working with, then it's worth considering. However, it's definitely not the only option anymore, as there are a few time series focused databases that also use a column based as opposed to a row based design. Often alternatives might be much easier to work with depending on the background of the team, or KDB might be if the business has significant support and tooling for KDB already. Of course, if your usage isn't particularly demanding, then you could look at something like a time series DB, which is really just a layer on top of Postgres and might be easier to be productive with. Yeah. If you're not familiar with KDB, KDB is basically the most esoteric computer language out there. The guy that created this language was too brilliant, probably autistic, and he made a language that was very complicated. And for him, I'm sure that it's great, but for anybody to learn it, it's like you're going to learn just that. You have to memorize all of the function calls. You have to memorize all the syntax because it's not like anything else. A method name in KDB is like 2 characters. You know, it's not like output to the console. You know, most ones are just like write line or something like that, right? In KDB, it's going to be like 2 letters, and they aren't WL either. I don't remember what they are. And then like you think, oh, I use a $sign in front of variables, or quotation marks means this. Well, quotation marks in KDB can mean like 5 different things depending on the context. So it's an extremely powerful tool that is a pain to work with. And people kind of moved away with it because of that. But for the correct use cases, it's the best game. But they are pointing out that there are some of these column-based databases and so forth out there that, with the right computing power, you could probably accomplish the same things that you accomplish in KDB, just maybe not quite as efficiently. But what you make up for in development time and responsiveness probably makes up for it. Yeah, probably. It was very interesting that I saw something like that come across my screen on Reddit in the quant forum. That's cool. My math teacher called me an average homie. Oh my gosh. Dude, so yesterday I was helping my daughter with math. And it was so frustrating because the math assignments were basically like, here is an equation for a line, and here is another equation for the line. Find the solution for the system. So it was basically finding answers for X and Y, which satisfies both equations. It was basically what they were learning about. And she seems to like, I think there's a lot of like, she'll learn something and then like after the assignment is done, you forget about it sort of a thing because you don't see why it's important to you, I guess. And so she will know what to do, but isn't very confident about it a lot. And then she'll get like frustrated and like stuck on things that she is clearly capable of doing, right? But I did get the joke, but I thought it was a good segue. Anyways, so I was saying like, okay, how do you graph this? Well, one easy way of graphing it is let's just say X is 0 for this one equation. Then what would Y be? And then X is 1, and what would Y be? And I was explaining this to my wife too. And every time I said that, she says, but X is not 0. Well, I'm not saying that X is the final solution to the equation. I'm just saying it's one possible. There's multiple solutions with this one equation. When you have both equations, there's only one solution. But there's multiple solutions to this one equation, and we're going to graph them. And this is how we graph them: is we say, what if X is 0? What if X is 1? Right? It's a hypothetical. One of the signs that somebody is low IQ is you ask them, if you didn't have breakfast this morning, how would you feel? And they will say, but I did have breakfast this morning. Right? I don't think that she's low IQ. I think that she's probably pretty average IQ. But she was like so caught up on that wasn't the answer. That she, she was acting low IQ in that situation because her brain was like so burnt out from doing it. So I'm kind of figure out how to keep them in the zone. You know what I mean? So that because she can do the math. But it seems like what happens is she goes so slowly at it. And then you've been doing it for hours and you've used all your brain power, So by the time it's like 9 o'clock at night. Pretty sure that information about intelligence quotients came from a viral 4chan post. Yeah, that could be. I don't know the origin of that. I've definitely seen it from people before, though. Like, I remember when I was a missionary. So if you're outside of the US, one of the things that I don't think people talk a whole lot about, and they don't realize how big of an impact it's had on the United States. But in the 80s, we basically closed down all of the mental asylums. And so you have all of these people running around on the streets that are basically crazy. And a lot of these people are just what I would call less accountable. Okay. They're just extremely unintelligent. So unintelligent that they can't really care for themselves. And these types of people are extremely likely to speak to missionaries. Missionary comes in and starts talking. A smart person says, I know what I know, and I have absolutely no interest, and they will cut right. The more intelligent a person is, usually the faster they'll cut you off, just because they're confident in it, right? Whereas people that are less intelligent, they don't know to cut you off. I'm not saying that you don't ever get intelligent people that talk to missionaries. Sometimes you do, and these are very open people, and those are some of the most amazing experiences. But, most people, they are, they don't want to make any changes in their life, so they cut you off very quickly. But these less accountable people, they'll talk to you, and missionaries don't have anything better going on. They'll keep talking to these people that are just, we call them less accountable. They're not all there, man. And yeah, they'll say crazy stuff, and you cannot use real logic, because it would be like if you ask them, if you did this, if this happened this morning, what would happen? They can't even think about hypothetical situations. There is a group of people out there that lack that ability, but those people probably wouldn't be able to even do algebra, right? So I know that she's not like an 80 IQ person, right? She's just maybe acting like an 80 IQ person in that situation because of the circumstances, right? So it's an interesting subject for me, because we spend all of this time about how do we keep Seth performing his best. I think I had a pretty hard workout yesterday. I got to bed on time, but the kids kind of did, it wasn't quite as restful as I want. It was hard to wake up this morning because my body definitely wanted the rest. Maybe should take a nap today. That probably has me a little bit less aggressive than I normally would be, because I could certainly see some situations where I really would have tried to hit that. But instead I came in and I said, I don't see anything in this news that I can see that really predicts orders, so I'm not going to touch it. Other people did, and they traded and they made money. So I was behind the curve today, right? Maybe it was possibly because I wasn't as aggressive, because I'm a little, worked out too hard yesterday, But now it's like I'm seeing this with my kids, where particularly this one where it's like, because of this situation, she's not performing very well. And so we have to adjust things so that she can perform well. Probably part of it is no distractions. We're going to have to create a study environment, the correct time to do it and everything, so that she can, and a way to play it so that she's getting enough of the reward to reinforce it in her mind, but also we're going to have to work on the confidence, right? I think I also need to do something about the confidence, because she doesn't know enough about the subject to feel confident in her projections. It's like, okay, here's an equation. You can solve it many different ways. You could use substitution, you could use elimination, you could use many different methods to do it, right? But some of them, it's like really clear. Well, these both have a 3, so you can just use elimination, right? One of the variables cancels out. This is very easy. But And she can see that too, but she still has to ask. You know what I mean? It's not confident. But I think I know how to deal with those problems too. So the older one, I don't know how to deal with his problems. I think we've kind of resolved some of that stuff, but it wasn't from anything brilliant that I did. Wait till you have to tackle integration with her. So like the thing is she'll ask a question and then I'll be like, okay, come into the office. Here I have the chalkboard. Do I still have it up there? Yeah, I do. I still have some of the equations up there, although you probably can't see them very well. And Mom had to ask me questions about this stuff. I don't know if Mom went beyond geometry. So if she gets into calc, and the boy, he hasn't asked for a whole lot of math help. But if she starts asking for math help about calculus, she will not have a clue, right? So I'm going to start doing integration rules, and she's going to be like, how the heck do you get that, right? Because there's just so much context and prerequisite knowledge to even start to fathom integration and differentiation and so forth, right? That's pretty crazy. Which means I will probably have to shoulder most of that burden. So I don't think that her birth dad knows a whole lot about that stuff either. But I tell you what, the stuff that she's doing, which is like graph a line, here's an equation, graph a line, that is so second nature for me. Because you have to deal with some of that when you're doing charting in trading, especially if you're writing indicators for trading, right? And then on top of that, I programmed a lot of calculator stuff. When I was in high school, I would just program stuff on my calculator. And so we were always doing equations with the calculator. So it's like second nature. When they get to calculus, I'm gonna have to do some review, right? Because I always had problems. I remember I did the calculus and then I went on a mission and came back, and then we had to do linear differential equations class, which is basically like, you have a million equations and a million variables, and how do you find the answer to all of those variables? It's possible, but you have to use matrix math and things like that. But they kind of walk you through all of the different ways of approaching this until you get to the point where they show how it works with the matrix math. And so at the beginning of that class, it was like, I'd have like 4 equations and you'd have to differentiate them all. And I would be like, forget all of the rules. Okay, here's how you differentiate an ln. Here's how you, you have to do the chain rule and all of these sorts of things. And I'll probably have to do that review again. I recently started teaching my girlfriend some thermodynamics and math concepts so we can talk about some interesting stuff. Recently got her hooked on the markets and margin call and Madoff series. Slowly brainwashing her so that we can have dates in which we trade propaganda. I would strongly caution you against this plan. So here's the thing. Dude, you just stepped on a really deep concept that I think really hits in on the heart of the trader condition. The reality is that trading is very, very lonely, right? And it's extremely difficult to come in and take risk and then lose, and nobody in your life understands it, right? Like, they might have sympathy for you, but they don't understand what it's like, right? So you want to have people to commiserate with. And I think that that's one of the driving factors behind why our audience here is so loyal, right? Not only am I providing people with some real useful information to help navigate the futures market and to avoid the major pitfalls in the futures market, but it also provides a place where you can actually talk with other people about trading and like venture frustrations about the markets or whatever else is going on, right? It's a coping mechanism, exactly, right? And a lot of traders wish that their partner understood those things, right? But what I have learned, and I've never been with a partner that understood those things, but what I have learned is that it's probably better that you don't. It's probably better that you have a partner that doesn't understand anything about that stuff, so that they can provide the other things that you lack, right? Find a partner that is extremely stable, okay? Don't go for the crazy girls, right? Go for the person that here's the most emotionally stable, right? And the most emotionally mature, because you're going to need that when you're being when you're having hard times, right? And they are able to worry about all of the other things so that you don't have to, and you can focus on performing, right? That's the way that my relationship works. I only have to worry about being the best trader and being the best site reliability engineer, and then making sure that the boys don't kill themselves when I'm off work, and helping with math when mom can't do it, right? And she is able to focus on the other things. See, if she was just like me, if she had the same interests as me, that wouldn't work, would it? Wouldn't work. So it's actually to your advantage to have somebody that doesn't really know about trading and doesn't really care. You will find other people you can find, like this stream, other guys that are actively trading that you can get that stuff from. You don't need it in your romantic partner. Yeah, I bet you that my wife would probably watch Order Flow and be interested in it. Women have a very different approach to trading that is advantageous in many ways. Certainly would help them in the beginning stages. They're kind of because they avoid risk, that's really advantageous to them in the beginning stages, but then it kind of hurts them later on. Which I kind of have the same problem. You notice there are some situations where I really should take risk and I have a hard time doing it. And then when I do it, sometimes I just take it on in the worst situations, right? We are starting to really settle around that point of control at 13.5. So I think there's still hope that there could be another sell coming in here. One of the things we got to consider still is that there is a 30-year auction, and that 30-year auction might not be very good. But then after that, probably they're going to buy it back up. Yeah. I mean, the thing is I can explain stuff to her about it, okay? But she's not going to have a deep conversation with me about what the latest CPI numbers mean, right? Or going through the math and finding the formulas or deriving, that's what I want, the word I was looking for, deriving the formulas that for like Kyle's model or something like that, right? like ultimately, as a trader, in order to be competitive in this market, you are going to have to dive down deep into what's going on in the market at a level that regular people just will not be able to follow. Yeah. Well, it's really imagine creating something brilliant and then calling it Kyle. Well, that was his name. He didn't call it the Kyle model. That's everybody just called it the Kyle model because that was his name. It's Albert Kyle. But that's fantastic advice. What the part that you're gonna have to know things on a level that other people won't be able to follow, right? That's why, like, you might not be autistic, but you kind of have to approach it autistically. Like, you need to say to yourself, I need to have an obsession and interest in this thing beyond what is logical, beyond what is reasonable. That's what's required to have an edge. And it is part of the problem in society is that, you know, the people in finance, they know things. You try and relate it to the public and they won't understand it, and it just makes them think that you're out of touch. Yeah, if they had called it the Albert model, that would have been probably worse. It's when you realize how big of an influence that paper has had on the rest of quantitative finance, it's really just so wild that most retail traders have never heard of him. And it's even more wild to think that that paper was written almost 40 years ago. It was written 38 years ago. We're watching the baby while she takes Asher to preschool. I think, like, that was one of the things that excited me. But the day that I read about that when I saw Jean-Philippe's paper about supporting the inelastic market hypothesis and reading that paper too, because I knew as I was reading it, like, this is the most significant paper of this decade in market microstructure. Like, in 2000, we had the Almgren Chris paper, and that was probably the most important paper for the next 10 years. And of the last 10 years, I don't know. But of the next 10 years, this inelastic market hypothesis, I think, is a really huge discovery. And again, it's like nobody in the retail space is talking about it. That one I think makes sense though, because the inelastic market hypothesis basically destroys a lot of people's conception of the market. Really turns the market into something that is not what they believe, and frankly kind of like destroys I guess you could say their illusions about the world in general. Like, we want to think that markets are efficient, and they're not. And some people can't handle knowing that that's the case. That the price is not actually an accurate reflection of all available information, that it's just the result of the orders that got put into it. And that almost never results in the correct answer. That's kind of tough to take. Because we've all been living under this assumption since the 80s that the market was perfectly efficient and that there was no way to improve it. And now we're kind of realizing, like, oh, actually, the effectiveness of capitalism probably has nothing to do with the efficiency of markets at all. I mean, markets are more efficient than comparative alternatives. But in terms of, like, perfect efficiency, they're like not even close. So I don't think that explains the success of capitalism. I think that what makes capitalism successful is freedom, not efficiency. But most libertarians out there, they hate to hear that. Cat Rowdy says, love your streams, great Discord. Thank you. I really do appreciate it, because it kind of is a thankless job sometimes, right? But to look back at like what we've done, it actually is quite amazing. And I don't know what the next steps are, but I do think that we'll do things. One of the things that we got to keep in mind is that, like, some of it is you do what you can, and then new opportunities come along, and you've got to be ready to take advantage of those new opportunities. Maybe we'll get those opportunities. That's tough because I don't like changing things, right? Like, I like trading treasuries. I don't think I'll ever stop watching the treasuries, but there might be some times where other things come along that I need to focus on a little bit more and try to see if I can develop an edge in those. And just because those are like new opportunities, right? Scary to me, because I know that for the stream to be any more successful than it is, you're starting to talk about like life-changing amounts of success, right? I'm pretty happy with the way that things are. Sometimes I look at the price as go, nope, this is way extended in my solo opinion, and given the track record, I'll short it or look for possible shorts. Well, yeah, that's totally the thing, is that it will almost always overextend. Yes, it will always either overextend or underreact. They'll overreact or underreact, always. This is well established. They've studied this, and they say here's a measure of fundamental value. How does the market trade relative to this fundamental value? And they'll always say, okay, here's the new piece of economic information, and here's what the model says. And they never go the amount that the model says. Never, not even close. There's like no relationship to them at all. So how can that be if this is like true fundamental information and the market is supposed to be informationally efficient? You can't. The only conclusion is that the market is not informationally efficient. But why? Well, now we know why. Market is inelastic. It reacts very strongly to new orders. We need good people in the space. Too many videos on TA with people scalping NQ with the chart. Yeah. It would be nice for John Grady to just stream, but he sticks to his old model, which is twice a year he does a course, and it's a couple $100 to watch him for that 2 weeks. Okay. I understand it. There's nothing wrong with it. But I like doing the way that we do it. So the thing is now, my dream, we talked about this the other day, right? They're building this private ski resort on the other side of the mountain. And I kind of want to have a house in this private ski resort. I would have to be a millionaire to do it. I'm not a millionaire yet. By the time I retire, I'll definitely be a millionaire. But I would really like to just have one of these houses on the mountain. Maybe we do get the opportunity to do that. But that will require some pretty big growth on my part, I think. My mustache is kind of tickling my face. Oh, you know what? It's time for me to get going, actually, guys. Well, CPI was very, very interesting. CPI brings back Hawkish. Now, how do I put this? Hawkish CPI slams markets. I'll put it that way. Federal Reserve meeting tomorrow. That's going to be really big. I think that's might be one of the most important meetings of the year. So we'll be here tomorrow, and then we'll stream the press conference as well. So see you guys then. Yeah, what mustache? I know, sorry. I don't let it get too long because then it just... Ugh, I don't like it too long, but I've been letting it grow larger than normal because it's cold outside. All right. Stay excellent, team.